Today is July 21st, 2023. In the movie Matrix, there is a there is a um, there is a keymaster, and the keymaster has the keys to open any door and lock any door. And when Neo and his company visit the keymaster to rescue him, the keymaster says, "There is a door, and once you enter this door, there will be more doors, and one door will open up to the way to the way." Open the door to the way, and then when you close the door, it happens this. And when you walk over to the left side, you see this, and when you go to the right side, you see the architect. That is the entryway, and this is the key to open that door. And what I noticed about day trading is essentially as simple as it is. Essentially, putting a trade, which is opening the door to enter into the trade, which is essentially there's two doors, one going into Wall Street and one going out of the Wall Street. Preferably, when I go into the trade, my pocket is light, and when I get out of the on the other side, my pocket is full of cash. That's the intent. So there was a point though that when I enter and exit this Wall Street behind these doors, then I get into a situation where everything that I see, there is a description of what's going on. And when I get into that door, when I open that door at that moment, at that instant, at that door, when I open that door, there are many doors. And many doors will open up a certain situation where the door immediately becomes red or immediately becomes green. And so the selection of the door is critical in making the right trades. And so when I get into the trade, then I have to figure out how to navigate to figure out where the exit door is. And once that door is there, then I can exit the door with a pocket full of change. Therefore, it is critical to understand and realize what's going on within the trade so I can visually inspect it and figure this out. What are the signals? What is an invitation of an open door to Wall Street? What is that? So far, what I've seen is that, okay, so why do I get into a trade? I get into a trade believing that all the signals are telling me that it's going in a particular direction. And more so if I'm aware of a significant strength behind it, that I can tell that it's going to move in an extended manner. That tells me that my trade will become a significant factor in the trade that I make. And there are confluences, there are things that tell me that I am moving in the right direction, such as I thought about this now. The lawyer went by again. What a nice lady. So I'm making this trade, and wow, that's a very nice lady. Okay, so now, so I'm making this trade, and I'm attempting to understand how things work. Okay, so in order for me to figure this out, I have to figure out what are the signs for me to enter and exit a trade. In order for me to enter a trade, then I have to figure this particular part of it out. I have to figure this out about the entryway because I can see it. Okay, so I have been trading like a dip and rip for a while without much success because there are some factors that I was not aware of that I should incorporate into my trading. But one thing for sure is that I am aware that the reason I get into a trade is not because I'm on the front side, because I'm on the back side. I have to be on the back side. And the backside is dangerous because once I get it, it can reverse. That's the problem. At the risk of that ever happening, I need to be in that situation where I'm going with the trend, not with the reversion trade, because like today, Meta just started coming down. So if I would have gotten in here, there was another 60% of the move that was about to occur. That would have just is essentially would have been just extinguished my account. So there are factors. One of the factors is there is a rounding feature where there's a collection of smaller candles that changes the momentum of the stock. Okay, it changes the momentum of the stock. It changes the momentum of the stock upon which when I'm on the backside and I see that it created a higher high, okay, a higher high above a particular resistance, immediate resistance, when it passed the first, after it reached the support, so stocks generally has a reversion factor, which approximately is about 20% of the movement of the stock, apparently, based on Al Brooks. So 80% of the time, the stock is in a trend. So which means that if I look at it, it means that the stock has dipped and it has reached a support. It reached the support. It has reached the support. It may have dipped and came back and it reached the support. Once it reaches a support and it's above, okay, then the first resistance, it has to reach the first resistance. When it passes the first resistance, then that tells me that there is a leg moving up into the direction that I'm looking at. So I am merely entertaining the concept of just buying the stock that is going up, just when the stock is just going up, okay? So when I entertain the concept of just the stock going up, okay, when the stock is going up, that means it had reached the support, S1, it had punched through R1, and then right after it punched through, then I can get in. That is one signal that tells me that the stock is going to move in the right direction. Now, the magnitude can be sort of calculated based on the position of the S1 and R1. Let's say it started out in the middle of the day and the stock dipped significantly without much fanfare, okay? Fanfare meaning that there was like a downgrade, severe downgrade. That means that it could be down here and it has more to go. So it really is meaningless in certain areas. Just like Tesla, that dropped like approximately about 10% within the past 2 to 3 days, essentially after earnings. The reality is that it has more room to move down. But when a significant news factor impacts the trade, it has the ability for the stock to move past and stay at that position. Some of these stocks that actually after earnings it moves up and it stays in that position. But without much fanfare, the stock would dip, and when it reaches a particular S1 and R1, it has a rubber band effect. And the further away from where initiated has a stronger rebounding characteristics to look forward to, and the move will be much more powerful. If the move only goes here, it barely moved, and so there is very little elastic force attached to that. But if it moves significantly based on just low fanfare, that means that it has the potential to move in that direction. That's why in S&P Capital they look at short interests, because they know that when a stock is in a very strong position, the shorts will tend to cover at that, and then the move will be substantially bigger. So that's what they're looking for. They're also looking for positive characteristics like significant news that are impacting in a particular direction where the release of the news has not impacted the overall move of the stock, and it takes time for it to move in a particular direction. And therefore, these are the things that I need to investigate, understand how they're set up, how I match that up. And then the other factor is, okay, on a daily chart form, how is the stock behaving? Okay, on a daily chart formation, if the stock is at here and I'm trying to get into this position, there is this particular position which has a tendency to be moving down, and which means that if the stock is actually dipped, it's going to have a less elasticity, and it wants to maintain that level. That means that when a stock is in an upward trajectory and when it dips, that dip has a stronger elasticity to rebound and go in the bullish direction. So these are the things that I need to jot down so that I can figure out what the entry criteria are. After I figure out what the entry criteria are, I can select the door. I can either select the Tesla door or Meta door or Microsoft door or Apple door or Google door or Amazon door or whatever door there is. Then I can formulate this strategy, enter, take advantage of it, exit, and that is my trade. The other factor is how do I exit the trade? So there has to be certain signals that I need to be aware of in order for me to exit the trade. So one of them is vice versa. So when I get in, I'm looking for the chart formation where a particular candlestick chart formation it's possible a new resistance is being generated, whereupon even though the established resistance is here and maybe here and it passed up here, but somewhere in the middle it could be setting up a resistance whereupon it reaches that point and it may retrace. And so I have to look at that and take profit when that happens. If for some reason the upper curve formation is still intact and it moves towards that resistance level, there will be a significant strength to bounce off of that resistance and have a drawdown before the strength kicks in and then eventually moves back up. So these are the things that I need to clearly substantiate, and there has to be, these are the things that I need to incorporate into my trading, and for some reason just clicking and oh hey, it looks good, clicking, that's not enough. Why do I know that it's not enough? I know that it's not enough because for quite a while I've been losing all the money that I have. And so it has brought me down to this point where I'm saying to myself, hey, look, I could give money away every day and try to figure this out, but why? Why not just go paper and then figure this out? Why not clearly substantiate these criteria that allows me to have a higher probability? Okay, that trade may be false. Something could happen, and that trade may go awry, and it may turn out to be a red day. But at least I have created a substantiated basis for me to enter, and then I have created a substantiated reasons to exit the trade. So these are the two things that I need. And once I have these things established, then I can go into practically any stock. And then I can practically get out of any stock and make the right trades every time, except for those outliers which the probability dictates that is possible, which means that when I enter, my thesis is there and it can reverse and I can lose my trade. But on a statistical basis, when I make those trades, then I should be better off.